Welcome back to another episode of Rawstocks. Today we're going to be taking a look at Tesla's daily chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow. Don't forget to check out the link in the description below. We have a link to the Rawstocks Discord where I'm hanging out during market trading hours, giving some of the best Tesla options callouts and also other analysis. Also a great community that's hanging out there talking shop about SPY, QQQ, Tesla, general market stuff. Today I think there was some chatter about Netflix since there was earnings today, but a great community that we're building so far all around the Rawstocks name. Also, we just posted a video on the 500 subscribers that we just hit today. There's a giveaway for a free t-shirt. Go ahead and I'll put a link to that video up at the top of the video today. Check out that video. It describes how you can enter the 500 sub giveaway. We're giving away a free Rawstocks t-shirt or tank top of the winner's choice. But that's all going to be done through the Discord, so make sure you at least join the free version of the Discord. If not, join the premium. We got the 30-day free trial code still going on, only 10. And so take advantage of that today. If not, normally it's a 7-day free trial. So let's jump into the charts here. We talked about the potential for an inside day, and look what we got. We got an inside day. We had an inside range and an inside day, all in one shot, right? We had our previous day high. We had our Monday range. We said wide range Monday often leads to an inside range Tuesday, and we got an inside range Tuesday. We also have in this blue level is we had on Monday a run on the previous week's low that was found on Friday the 19th candle. We talked about that. We talked about the fact that that wick low, right? We've seen a lot of kind of bounce in this area, and if we draw that out, we can see how much bounce we've had in this section, right? That's order accumulation. If we go back, we can also see that we've found support in this same level. And we found support in that same level back in October before we saw a nice rally, right? Off that October area, off the low, but we'll just say in the area we're talking about, we saw a 7% rally. Okay, and then off of this area range here, we saw a nearly 19% rally. And so what would that look like? Well, we got 7, we got 19. Well, let's call it somewhere in the middle. Maybe 14. Let's call it 30. We'll say 13%, okay? Let's say even a 13% rally. Where would that bring us back? Right? That would bring us back inside of this little fair value gap, inside of this volume imbalance, inside of this daily gap down. But maybe we only find ourselves, in a little bit more shallow rally there that just brings us up to, maybe this fair value gap right there. But there are some targets there, right? Even a little bit higher, we could say maybe this liquidity from this up close candle here. There's also some unbalanced price ranges from these sell side levels that were taken here and here. And so lots of targets, but let's just, 10, 15% rally is totally, not out of the question because we've seen a, nearly 8% rally here. We see a nice big, 19% rally here. And so we know that in this range, there's been areas of support, and we are currently down. We haven't quite taken the low of this wick here, but we came pretty close. And the fact that we ran out the previous week low, bounced up, and then we were not able to run on that previous week low or take the low of this week. Leading into earnings, it is a little, I am a little bit skeptical. And I'll show you on the daily chart what we might expect a couple things to look like. Okay, we got earnings tomorrow, right? I do expect that we kind of like push up a little bit into earnings. It may just kind of like chop back and forth, right? Pre-earnings, maybe try to push up like leading into the earnings call. And then there's entirely the possibility, and this is if we like open flat and not gap up, although we were trading up during late session or like, the after hour session and even on Robinhood overnight. But we could see a manipulation move that runs out these stops one more time, right? As smart money, if they want to accumulate one last run on building a position here. We might see a quick drop and then an instant pop, and then look to take out the weekly range tomorrow. And then we got 1 hour liquidity right here at 220. So that's kind of what I'm expecting. Not sure that it's going to play out. It's all speculative, right? I mean, these are just kind of guesses. We can know what our liquidity targets are. We can know, areas that price is likely to return to, because this was a low resistance liquidity run down to where orders rest in these order blocks from November 9th and 10th, and these rejection wicks in those candles. There were no serious buyers across here, and there were large orders down here. So we just rapidly declined into those resting orders, and then we're accumulating positions, and we'll probably see a rally up, right? Even if it's just to equilibrium, that rally would look like 235.65. It may happen all at once. It may not happen all at once. Maybe we're not quite at the bottom, but we're carving out a bottom. We'll just have to see what happens. But that'd be a 14% run, right? Right around the areas we were talking about, right? And a deeper retracement would be 242.62, 247.76. So lots of different targets. And then again, there's volume gaps, fair value gaps, volume imbalances, daily gaps, all kinds of gaps. Tons of gaps. Very little structure for engineered liquidity as far as buy side targets go, but lots of other types of targets that we'll be looking for price to be drawn into or retraced to. Ultimately, we have our swing external liquidity back up at 265. Doubt we're going to get there, but we may rally up and then start some structure and then rally above that high. We'll have to see, because this would be, in that case, a lower high here, but it could just be a bounce to then drop lower, or it could be a full reversal where we're going to end up taking out that high. So we'll wait and see, what develops over the course of this year. But there is also a lot of 250 calls open for quarterly expiration for April 19th, and so that could be our next, kind of longer term move over February and March up into April, where we might be looking to see that 250 range sometime before April 19th. Now, if we don't do that first play, what we also could look for is we could look for price to sell down, right, and take this low. And at that point, we could see it pop up and earnings not be seen as great. And then we could potentially see a run down to 194. Right? Smart money doesn't need to accumulate all in one spot. Just because they're accumulating here doesn't mean they don't run it down here, try to grab some more shares, more long positions, and then eventually run it up, right? But we know that we're oversold. Our RSI is below 30, and it's kind of leveling out. So it doesn't look as much like we saw a severe decline below, pop up, and set a higher low where we might see that divergence play out more or less. It looks like it's just kind of rolling over. And so we'll see if price then wants to just start to rally off of that point. So I'm going to keep our weekly range on there, and then I'm going to put our daily high and our daily low. And you can see our daily low is right there about the previous week low. We got pretty close. I was in a trade call out and didn't quite hit that spot, and that's what I was looking for to potentially take the stop, and we came just short of hitting it. So let's look into the 1 hour chart. On the 1 hour chart, we're pretty neutral on the RSI, kind of in the middle there. You can see we've seen similar situations where we rallied up on open, come back down. We've taken London lows after taking London highs. Similar thing, right? And then this one we dropped down. You can see that run on the previous week low, pretty clear there. Rallied up, faded out. Okay, London rallied us up. We took a run on liquidity up above here, and I'm sure that there is some kind of lower time frame target that was being targeted with this wick specifically, or it could just been a retracement. But then you see again fade down, run on London low. Ultimately, we rallied up, and this is probably a good indication of what we're likely to see heading into tomorrow before earnings, is that we maybe see some additional rally up, maybe back to the weekly opening price from this week. If we're above weekly opening price, it's going to be more bullish. If you're looking to go long, you're looking to buy contracts below weekly opening price, and you're looking to if you're looking to go short, you're looking to go short above weekly opening price. It's just kind of a general rule of thumb. You can also look back and see similar things with the London opens last Friday. where we ran the London high, came back down, took the London low. Also on Thursday, we ran the London high, came back down, took the London low. So, I mean, lots of examples of how the London macro can give you some of those targets. That if you see the liquidity delivered to one side, we might target the additional opposite side. Okay, let's drop down into the 15-minute time frame. On the 15-minute time frame, I'm going to take off, some of these. Let me see which one's giving me the New York macro. I think it's this one here. I'm going to take that off. All right, so here on the 15-minute chart, also again looking at today, we see again the London macro. Let's see where our 9:30 open is. Our 9:30 open is that candle that just rips. At that point, we just faded basically the entire day on the 15-minute chart as well. Nothing specifically I'm looking at here, again, besides the fact that we just barely fell short of running that wick down to the previous week low. I did say in the Discord rooms, if we don't take the previous week's low again, that's going to be a fairly bullish sign. And then at that point, that wick rejected, we saw price move back up kind of into the end of the day. Then if we look finally at what I'm going to look at here is the 1-minute chart. And on the 1-minute chart, what I want to specifically show you is the smart money concept setups that we've been talking a lot about. Okay, and what we can see is we have our London session here. We've already delivered above the London high. Okay, so we could either be anticipating for price to open and for us to move down to the London low and immediately take that, or we'll just see what price gives us. So leading into market open, we get a change of character here. We get some breakout candles. Then we get our notorious fair value gap, right, as taught by ICT, Smart Money Concepts. We get our return to fair value gap, right? We oftentimes want to target that consequent encroachment or that middle of the fair value gap as our entry point. Okay, and then we run it up from there. If you look at what the risk reward ratio that we teach, the 2-to-1, and we look at where the previous low is and we target the previous high, you can see that it hits perfectly on a 2-to-1, right? We got a 1.99, but you can see that wick goes right above the green box, never gets stopped out, hits our target 2-to-1, previous low being the stop, and then we're running the TP based on where the stop loss is. So there's a great entry right out of the gate if you're watching for that. Then we run into the silver bullet time macro that starts at 10 o'clock. Okay, and then from 10 o'clock, we see if we can find a specific setup. So in 10 o'clock, we had started coming back down. We were below. Where's market open? 9:30. We were below market open. And so that's a bearish look. So you could have tried to take this change of character here. That is not a displacement candle, but there is a small fair value gap. I don't like either of those as far as we're not getting large displacement, right? We want to see large displacement candles. The bigger the better for the entry. This would not constitute, large displacement through here. We get our change of character, but that's not the fair value gap we want to be entering. It's not really going to give us the trade that we want. Although it does, see a little bit of run up after it comes back down into it. It's not a good one. Right here, though, we get a bigger fair value gap and we get displacement and we immediately see a candle up and we can run on an old high. So if you were looking for a scalp in the silver bullet time macro, there's your fair value gap and your return to fair value gap. Right? And if we try to grab the consequent encroachment right there, and we look at our old high, our take profit at a 2-to-1 would be down there. And you can see throughout the silver bullet, we don't quite get there, but then we deliver there. We never get stopped out. Okay, and then price does get to where we expect it to go. So your entries in the silver bullet time macro, and it hits target without ever getting stopped. Two really nice trade entries there if you're using Smart Money Concepts on the 1 hour time frame. and then we're not really looking to trade after the 11 o'clock hour. So if we don't see another trade set up before 11 for entry, okay, then we're not likely to take it. You can take it, but that's not the elements of a trade setup. We're looking for a trade entry before 11 o'clock. You can see we get to change a character, but the 11 o'clock is right here. We do not get the return to the fair value gap during that time window. And then what happens is we trade down through that fair value gap. And then at that point, we trade much lower. Okay. And then after that, again, we're not really, you can be looking for trades, but it's not the ideal trading scenario. But you do see another fair value gap here after you let price settle. And I believe I did take this one for the swing trade right there. You can see we tested that fair value gap a couple different times. This really looks like smart money is trying to accumulate positions. There also appears to be an inverted head and shoulders if you're looking at retail, and that head and shoulders would be likely to take us up to, let's see, depending on which shoulder you're looking at, kind of looks like a complex head and shoulder, so there could be two different price targets. We'll look at the higher one. The higher one would take us back up to 212.50. If you looked at this low to this neckline, we also have a neckline here. So you have a very nice structure where we came down and it kind of created a complex head and shoulder pattern. And so you could, conservatively target this here and say when that neckline breaks, that we'd be looking for something like 211.41, and then the higher target would be again back up like 212.50. And so we'll see if we get the final play out on that. We did run out of time, but it was starting to look like we might see a pump up, and then we might get the gap up, or with the aftermarket and then the pre-market buying, we might see that kind of finish off, if not run higher above old highs. So I just showed you guys 3 different smart money concept setups. I'm sure there's lots of other ones in there, but that's the way to use your smart money concepts 1 minute to do your day trading and your scalping, to make that $100, $200, $300 a day that we talk about, with few trade entries and minimal risk. So hopefully that's been helpful for you guys. Good luck on your trading tomorrow. Really excited to see what earnings brings. And again, don't forget to like, subscribe, join the channel, share with all your friends, and watch the giveaway video so you can figure out how to get a Rawstocks t-shirt, potentially be the winner of that giveaway. Thanks for the support, and we'll see you on the next one.